Hello, this is the Chartprofit video. Just beyond 3 hours into the trading day on Friday the 4th of December. This from the pre-open today. Just to recap this from comment on the 24th of November on the Tuesday here. I said that the E-mini S&P, which we're looking at here, had probed 2094 resistance just in the end of the previous week and has stalled. We went into a period of consolidation here, all these value areas overlapping. Said that this could be buyers resting, looking for a response from the sellers, but until price prints time above 2094, I will not be initiating new longs at these levels. So here's 2094, pre-opened this Tuesday on the 1st. I said that the E-mini had been consolidating for 7 days, having stalled at that major point of control. Bulls will want to see price above this level, and the likely volatility we'll see later this week with the ECB decision and the US jobs data could resolve the matter. During that session, actually, we probed above the point of control. We had aggressive buying marked up here. This green value area was actually printed below that level, and then the following day we merely tested that green at top high and then immediately sold off. E-mini spent most time at that 2094 level, and the value area was sort of an outside value area. Didn't give us much of a clue apart from the fact the E-mini closed very weak here. And then if we look at the profile for the Thursday, it was lower, it was wider, and we had aggressive selling marked at the low here. All of this following disappointment from the ECB, and we have the expected volatility. So I'll just sum that up pre-open today and just said that with the E-mini unable to print time above that major point of control up here, we're looking for a value area printed entirely above it at least. So with the E-mini unable to print time above that level and aggressive selling here marked, I will be cautious. I also said just for the day frame, just for today's activity, that the minor half range off the November high is at 2054.50. I said the price printing time back below that level, it had been tested prior to the open. Price printing time back below that point post open would suggest a retest of Thursday's low. Here we have a live chart. This is 30-minute chart. We actually opened in this bar here just below that level and then immediately came back above it. E-mini has spent most of the time during the session printing just above 2070. With that sell-off yesterday, we saw the breadth numbers, the percentage stocks greater than their 50-day moving average for New York fall just below 50 for NASDAQ, and the Russell 2000 printing just above 50. This number here, and you can see it here on the breadth chart, just falling below the 50 level there. This other indicator that we have above here holding its level, which is 0, but that means on the pulse chart we get a grey block here, and the price momentum pretty unconvincing at the moment, but kind of heading in the right direction. And we have the red on the pulse chart up there indicating the significant selling on Thursday. But most importantly here again on the spider with its time support resistance up here at 209.90, we've had 2 probes up into that level over the last couple of months, and for now at least unable to print any time, which would be reasonably significant if we could see some time up here. But as I've said, so far we haven't been able to do that. Also mentioned in the pre-open yesterday, the buying and selling imbalances, the red or the green, are less predictive of short-term price direction when the chart is printing close to a point of control of some significance. And I mentioned back here in July and August, where for a period of weeks we had some aggressive buying up here which didn't follow through, merely because it was printing very close to that point of control, and we've had the same thing over here. These solid green bars indicate aggressive buying that I mark day to day in the pre-open, and you can see that generally they indicate in the short term pretty positive indication, except here we see without any significant selling being marked, we see the E-mini came lower as we probed up into that major level. So the next big support on the chart is down here, 198.10, the half range. But the pulse chart at the moment doesn't look positive enough just to look at the long side. Certainly not for investors. Next we're looking here at the small caps. This is the Russell 2000 ETF, IWM. Just looking here at a 30-minute price distribution over 2 years from September 2013, and you can see these, well, first of all you can see the red dotted line is the point of control just above 115, and this whole consolidation area generates a value area high up here just below 120 and a value area low down here just below 109. And if I translate those levels over onto the daily chart of IWM, you can see that in August, and we've seen this before, September, October showed this, that we probed below the value area low and came back. We've now just probed the value area high up here just below 120. Now we have the value area, sorry, I beg your pardon, we have the major point of control here at 115.35. That is the most important level on the chart. As long as we hold above that level, the IWM is in a strong price location. But just back to here suggests to me, from looking at these distributions over many years, that the Russell, if it's going to push up beyond that value area high, we may need to see this level here migrate higher. So we may need to spend some time between these 2 points, lift the point of control, and that would then raise the value area higher. But because of the level that the high here came in at, it wouldn't need to do that on the downside. So price back below 115.35 down here, or time spent down there, down here on the chart, would be bearish, I think. This was the 5-year November in a 5-year predicted from the decade cycle. So this was the Dow cycle for November predicted, which I said when we showed it at the start of November, was looking for a rally to sort of mid-month and then a flat period to the end of the month. In fact, we had nothing like that. We had a flat period at the end of the month, but this was completely not part of that expectation. I had a typo down here. This should be December. So this is the averaged Dow in December in a 5-year or a year ending in 5. We get some weakness for the first few days of the month, and then a rally, and some weakness through to about the 20th, and then a further rally. Since I started showing these a good few months back, I think November was the least impressive, so let's see how December pans out. Here's some European charts. This is the FTSE 100 index with all the levels that we've been showing over the past few weeks. Again, we mentioned this many times, the FTSE having real problems with this natural resistance at the halfway point, and again this week, exact resistance from that halfway off this year's high back over here. It's also printing and finishing the week below 63.35, which is the 8-month point of control. FTSE is one of the weakest indices at the moment. The DAX, the German DAX, as we know, August, September, double bottomed on its major down there, which is a powerful pattern, came swiftly back to the halfway point, and the 12-month point of control is at 10.36. We've had late November plenty of time printed above that level, which was really encouraging. Following the disappointing ECB announcement, the markets took it in a disappointed fashion. The German DAX has finished back below its 12-month here and back below its halfway point from this year's high. So again, finishing the week in a weak price location. Quick look at the sentiment. The RIDEX ratio, on my version of the RIDEX ratio, printed a 70-day high, I think on Monday earlier this week, up here on the price chart. And you can just see it here. And the ratio just pushed above the November level. It may have been a clue right there that retail investor had been getting a little over optimistic, and we talked about this chart in last week's webcast, whereby we just pushed above the October peak. This is the RIDEX Bull Fund assets in isolation that I follow, and these were getting quite high. In fact, they peaked here earlier in the week, and these levels up here are the only periods in the last good few years that we'd seen the bull fund assets higher than they currently were this week. So they've fallen pretty swiftly here, just the last couple of days. But so have the bear fund assets. Bear fund assets have been falling pretty swiftly. They peaked over here in early October as money really moved very quickly into these bear funds, which rather frustratingly for those traders. So the S&P reversed pretty quickly and head higher, which meant this money was losing money, and then they started to withdraw it. But we're now down, right down here, which historically is pretty low. So not much assets here in the bear funds. And I also showed this last week. This is the assets in total. That's the bull fund assets that I follow and the bear funds added together. And again, looking back over a good few years, this is the only point that showed a higher level. And high total assets, as I mentioned last week, tend to correspond to price peaks. So this has pretty rapidly come lower. As we've just seen last couple of days, lots of investment flowing out of both sets of funds. This is the public poll from AAII. The actual numbers here themselves pretty neutral. If we look at the black line here, which is the 4-week moving average of the net bulls minus bears, this 2-year low was the last significant pattern on the chart. Public got very bearish according to this indicator at that point, which was close to this low. That moving average then came higher, and we hit a multi-month high over here late October. Right now there's pretty neutral reading coming in here, but this point did suggest a few too many bulls in the numbers. So we currently have bulls percent at 29.5, bears percent 21.2, both quite low numbers, suggesting that just about more than half, or roughly half, the participants in the poll are declaring themselves neutral. So let's look at that. We have a number here just under 50 this week here. So almost 50% of the respondents are neutral on the market rather than declaring a bias. This may mean nothing, but the last 2 occasions certainly weren't bullish for the market at that point. Haven't done much of a study on this, but it does indicate just lack of conviction from the retail investor anyway. Investors Intelligence poll, the bulls percent was lower at 41.2, bears was unchanged again at 26.8. Last significant pattern here was the 4-week moving average of the net, the bulls minus bears, which dipped below 0 here in early September. Currently, again, pretty neutral. Can't see much of a signal coming from this indicator unless there is quite a large sell-off and we see this level tested. So we see the moving average break down there. That would be quite an important reading if that happened. We said last week that the money managers exposure index was rather high at 70.45. That was the highest since June. It's just a little lower this week. And Lipper US fund flows more or less telling us something similar to the Ridex data. They reported equity fund, including ETF, outflows of just under $1 billion in the week to the 25th. The 4-week flow, this black line, is almost at 0. And as we know, it did reach a multi-month high late October and a multi-year low in late August. Going to quickly show you the supporting charts. Looking here at oil, this is crude futures actually. As we know, this important low back here in August, we've shown this chart a few times since, to the subsequent high on the halfway point here. I said the last 2 or 3 webcasts that price below that level is weak price location, and we're not really getting anywhere at the moment. Does look like the possibility of a retest of this low. As I showed last week in the webcast and previously, this is really a very important level on the monthly chart. Price sort of down here would be extremely weak, but I'm just wondering if we're forming a longer term, some kind of base here. Maybe, as I said last week, maybe a test, if we do get it, might quickly reverse. We'll see. This is GLD, the gold ETF, and I've said that again, this low here back in July, really important level to find a low, and I did say that price below that level would be an extremely weak price location, and that's where we've been printing through most of November. Having said that, we've had a very strong day today, printing back up towards that level, and cash as well, very good day today. Looking at bonds, this is the 7 to 10 Treasury ETF, this is IEF, and the level's working pretty well here. 105 is the major point of control, and we had support right on that level early November. Subsequently, we probed up into the 18-month at 106.60. That's been rejected. Had a really poor day yesterday and a bit of a rally today, but price between these two levels not giving us any kind of clue, but if we see price printing down here, as this comment has been here for weeks, the major level at 105, and I've written here price below this level is weak, so price below 105 would indicate lower for bonds, I think, but we're bouncing a little bit today. I'm really uncertain unless we see price printing time back above 106.60, and that would indicate higher. Dollar index also had a really terrible day yesterday. It just probed above the high from earlier in this year, just tested it and immediately sold off again on the back of that ECB announcement. There are minor levels in here where the price was printed enough time to give us some kind of significant point of control, which I will monitor pre-open next week. But currently, in the longer term, it still remains in a pretty strong price location. Euro FX chart had a very strong day yesterday. Longer term remains in a weak price location. British pound against the dollar, the same. And the Aussie dollar, as I noted last week, the same. So, longer term, still in a weak price location, but as I said last week, I'm wondering if this is a basing pattern here. It's actually relatively stronger than some other pairs. The halfway point of the September low to this high, and we printed this last week, this consolidation above it. So this is just generally stronger than some of those other charts. Just think this might be a basing pattern here. This is a really important low, as we've seen before. And is this some kind of neckline here for a reversal pattern? I just think it's a possibility, and then think about that gold chart again, but the major is up here at spot 76, and not until we see price printing up here for the longer term could we think that the long-term trend is reversing. But just an interesting chart. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.